Hi, this is Mark with Right Line Trading, and this is our evening newsletter, starting with this disclaimer that all signals and trading opportunities that we provide are for educational demonstration purposes only. Everyone should understand that participating in trading involves substantial risk, and then a person can lose a substantial amount of money. Always carefully consider your financial position prior to making a trade. Never is more than you can afford to lose. And you may want to do your own due diligence and consult a financial advisor. Now, we all know that besides death and taxes, there are just no sure things in life, and certainly no sure things in the market. But if we take a look at corn, this is an ETF. It's a Tachrium ETF, which specialize on the agriculturals. There's a Tachrium wheat, soybeans, corn, others as well. Now, if we look at corn, it's putting in a series of higher lows and higher highs. Whoops, there goes the bell. And higher highs. And from a technical standpoint, we are getting system generated buy signals right here. And it's looking very, very good as a potential buy. Now, the cost of food in the United States grew 6.1% in November of this year. Food inflation has been going up every month since May. Now, those are really impressive numbers. They're not good ones, but they're obviously very impressive in their magnitude and direction. And they're very, very possibly going through the new year into the winter and spring. There could be major shortages of food in the United States. And I believe that soybeans, corn, wheat are going to really skyrocket in price. Now, of the three, corn is in the best technical position to trade. Now, I would take a long-term options position on corn. Remember, we're not looking for that 7,000% in 20 minutes like the self-appointed gurus get. We want to make real money under real market conditions. If we buy a call going out 1 year and continue to sell calls against it, every 2 weeks, we can get a bi-weekly paycheck and be holding on to a call whose cost basis is going to continually drop and also continually increase in value. I just don't believe that the price of the agriculturals in this market, under current conditions, are going to go down. I think just as we all really felt strongly about the price of energy rising, it may now have plateaued and may start to drop. That's really unclear, but the price of the agriculturals are just starting to really take off. So if we look at the commodities like the agriculturals, like heating oil or energy, by far and away, this is the most favorable place to be. So I would strongly recommend taking a position on corn. Totally up to you how you want to handle it. You can, if you have a portfolio size big enough, you can just go ahead and buy a certain number of shares of the ETF, or like I said, you can take a long-term options position, a leap, which are way underutilized and can be tremendously lucrative. They can bring you in 200 or 300% over the course of 12 months. And let me tell you, that is not chump change. And like I said, we're going to sell bi-weekly calls against the call we own, which we're going to treat like a stock. And we could really, really wind up creating a nice options position that brings us in terrific money. Everyone have a wonderful evening, and I look forward to talking with you tomorrow.